Welcome everyone here tonight to the second in our three-part webinar series from the Iowa Cattlemen's Association. My name is Katie Altoff. I am the Senior Director of Communications and Membership for the association. And I am joined here tonight with three excellent panelists. I'm going to be introducing them here in a second. But first, we've got a couple housekeeping things. So first of all, like I said, this is the second of three webinars. The first one that we did was on pasture management and mineral. That is available on our YouTube channel as well as our weekly podcast. You can search for Iowa Cattlemen's podcast if you have interest in listening to that there. Next week, we will be doing another webinar, same time, same place, 7 p.m. on Wednesday night. We're going to be focusing on selling beef locally, what the rules and regs are here in Iowa, what your options are, and possible ways that we could ramp that up. But tonight, we're really going to focus in on price discovery, transparency in our fed cattle markets, some of the challenges that we're facing, and some possible solutions. We want to thank our sponsors tonight. We have a nice list of them. They agreed originally to sponsor some in-person events for us, but we came to this virtual format and they were very generous in continuing their sponsorship. So big thank you here to AgriVision Equipment Group, Farm Credit Services of America in Sheldon and Red Oak, First National Bank Messina, Frontier Bank, Iowa State Savings Bank, Midwest PMS LLC, People's Bank of Leicester, and Security Savings Bank. Thank you again for your sponsorship. One more piece of housekeeping. We have a lot of participants on our Zoom tonight, expecting about 200 that pre-registered. So we have turned off your screens and audio. If you have a question and you are on Zoom, please go ahead and type that into the Q&A box that you see at the bottom of your screen. If you are on Facebook and you are watching, again, go ahead and type your question in there. We'll be sorting through the questions and trying to get through as many as possible. But like I said, our focus tonight is really going to be on price discovery, transparency, producer leverage in the fed cattle markets. All right, with that, let's introduce our panelists here. So we've got Corbitt Wall. Corbitt is coming to us from Amborella, Texas. He is a livestock market analyst for DV Auction, and you all probably recognize him from his daily feeder flash videos. We've also got Jordan Levi. Jordan is the program manager and founder of Arcadia Asset Management, as well as the Fed Cattle Exchange. In March of 2018, Jordan and his firm and partners facilitated the purchase of Five Rivers cattle. He's a member of the Nebraska Cattlemen's Association and on the Live Cattle Marketing Committee for NCBA. Last but not least, we have Brad Kooima from right up there in Northwest Iowa. Brad is the president of Kooima Verilec Trading and has been a broker since 1980, been feeding cattle since 1974, still active farmer feeder with his son in Rock Valley. He sits on ICA's Feedlot Council, also been active at NCBA on the cattle marketing committees there. So thank you to each of these guys for coming on and being willing to do this. It's not easy to get in front of a live crowd like this and talk about these really big topics, but it's something that is very important to our industry, both to producers here in Iowa as well as across the country. So thanks again, guys, for giving all of us this opportunity to talk with you tonight. First thing, I think we're ready to dive in here. So we really want to talk about, I want to get your opinion on what the problem is in price discovery and transparency as you see it. And I'm going to throw this one to Corbitt first.
Okay, well, the biggest problem we have, and it relates to price discovery, but the biggest problem we have by far is that your cattle people cannot get a big enough percentage of the retail beef dollar. And how we start to gain on that remains to be seen, but we've got to do something. We recently set an all-time record for the smallest percentage. Your cattle people are now getting 14% of the retail beef dollar, and that just happened through the COVID-19 crisis.
Yeah, we've definitely seen some of these challenges exacerbated, and that spread between boxed beef and live cattle prices is definitely one of those challenges. Brad and Jordan, you want to chime in here and give your perspective?
Sure. Well, Katie, this goes back to before COVID, before Holcomb Fire. The need to increase transparent negotiated cash trade isn't something that the three of us or anyone invented. The CME has told us that. The CFTC has told us that. University scholars have told us that. It's a situation that, frankly, there's some of us have been working on it for a long, long time. Jordan has been acutely involved, in fact, instrumental in an awful lot of the dialogue and discussion. The disparity between what the formula traders are getting and what the cash traders are getting is a huge problem, in my opinion. The number of negotiated trade, in spite of all of our efforts and dialogue since back before 2015, so far has not produced results. In fact, the number of formula cattle continues to increase in almost every region, in some regions down to the lowest level that they've ever been. So there's a great need, and I don't think that that any of us are the only ones that would share that opinion.
Okay, Jordan, I'll give you a chance here too.
Yeah, sure, Katie. Thanks again for having me. It's an honor to be part of the Iowa Cattlemen's Association meeting today. I respect both what Corbitt and Brad have said and understand their positions extremely well. I think part of the disparity that Corbitt explains or shows us at the 14% number is merely a function of bottleneck economics. And while leverage is important, my focus has always been on bringing price discovery and price transparency to light and ways to improve that. My deepest concern today and has been as we entered into this calendar year is the fact that we're now at or below the numbers of the 2017 Coot study to achieve robust price discovery in multiple states. And so as I look at my concern, it's to achieve those goals and to achieve those goals that are well researched through alternative means of negotiation. Some would involve the traditional cash that Brad has discussed, and others would involve new mechanisms that might add additional value to producers throughout the chain.
Okay, so let's back up here a little bit. We've got different categories of cattle marketings that are reported through livestock mandatory reporting. And over the past few years, we've seen negotiated cattle trade decrease considerably across the country. However, it varies from region to region. Who wants to kind of dive into how that's different from region to region across the country and maybe why that is?
Well, I'll dive into it. We have our 5 area feeding regions, and the way they operate is very, very different. You look at Iowa, and we're here with Iowa Cattlemen's Association. They're sitting at 50% negotiated cash. So they're doing very well. But what's ironic is Texas, that's sitting at roughly 7% negotiated cash, according to Dr. Koont's study that Jordan mentioned just a minute ago. The Texas region has the greatest offering of price discovery. So we go up into Kansas, we're sitting somewhere in the high teens as far as negotiated cash, and in Nebraska, just over 30%. Colorado, we don't have any idea because confidentiality rules prevent us from seeing most of that information that comes through Colorado because there's not enough players in there.
So we've got higher levels of cash negotiated trade in the upper Midwest than we do in the South. But you said, Corbitt, that Texas has a lot to offer as far as price discovery. What do you mean there?
Well, if we normally see a price spread in the Northern Plains and in the Midwest, where typically, and we haven't been in a typical situation through this pandemic. So we've seen much higher negotiated cash trade the last 3 months than we've seen for years and years and decades. And so we can't really compare it to that. But the reason that we see more price discovery in the Southern Plains is because everything brings one price for the most part during typical times. So if it's $1.10, all the cattle bring $1.10. Typically don't see any dressed price in Texas. They sell very, very few cattle dressed. And Texas is just, has kind of always been your bench for what the price is. You know, if you want to know what the price of cattle is, it's always kind of been that, and it's more indicative. If you look at that study that Dr. Kuntz did, if we gained a buck in Texas, then we know that the market's a buck higher.
So it has a bigger impact on prices
Yes.
across the country when we see more negotiated trade in the South. Is that what
For
I'm?
sure.
Okay.
For sure.
Okay. So how does that regional imbalance of negotiated trade, how does that affect producers in different regions? And Brad, specifically, you know, we're here with the Iowa Cattlemen's Association. How does that affect Iowa's producers?
Well, I'm going to make a little bit of a comment on Corbitt's response there.
Sure.
I understand exactly where he's coming from. When you trade so few cattle in Texas, that there a little bit of a change is more impactful than where you trade a significant number of them. But I think, you know, let's be real, the whole nature of cattle feeding is so much different there with large feed yards, you know, corporate type feed compared to the, you know, 1,000 head guys that are up here in the upper Midwest, you know, so the nature of the business lends towards more negotiated trade where we are up here in the north than they do. What's the challenge for the cash trader? Here's last week's LMR, CT 151. Steer and heifer average for, if you're a formula guy, you got 185.99. If you're a cash trader, you got 166.49. I know in a downtrending market that lags some, but that's $180 a head, the difference between a formula trade average and a cash trade average. That's where the guys up here that are negotiating the trade, doing the hard work for the negotiated trade, feel like there's a horrific imbalance in price. So, you know, that's a huge issue for me and for those of us in the north.
So Jordan, you know, obviously I know where the Midwest stands on this issue, that this imbalance needs to be rectified, that we need to figure out a way to really reward our Midwestern feeders for the high quality cattle that they are producing. Kind of give me your perspective on that.
Yeah, so to me, the goal is to reduce the economic imbalance between selling on an alternative marketing arrangement versus traditional cash. There's a reason that the market continues to gravitate to receiving premiums and discounts for carcass trades because they're being paid for that. And presumably they're paying for those genetics when they're buying feeder cattle. And so really my solution is the bid the grid. I think you get the best of both worlds. The cattle are not committed. They're up for negotiation. They're not turned in. And the starting price is a bid and offer process, no different than the bid and offer process of traditional cash. At the same time, producers, both those producers in the 1,000 head world and those producers in the 50,000 head world, will be compensated for choice. They'll be compensated for ones and twos. They'll be discounted for heavies, etc. And so when I look at the goal, which I believe the goal is to achieve the numbers in the Kuntz study, and the goal is to get as much money back into the cow-calf and the feeder's hands, the best way to do that is to make or ask or force the packers to do something in the bid the grid so that everybody has that opportunity. And I think the best way to achieve that is to have some form of standardized grid that the world can see and specs that are utilized every single day in size. And so I recommend to the NCBA working group and continue to recommend that we utilize the specs of the CME futures contract with a few nuances.
Okay. So I don't ever want to assume that our audience has background knowledge that they may not. So when you're talking about bid the grid, you are talking about the category of cattle marketing called negotiated grid, correct?
Correct.
So similar to a formula sale, but you would negotiate that base price. Right now, most of those formula sales use a base price that is based off of negotiated cattle. In a lot of cases, we're talking about feed yards in the South, formula yards, as Brad would call them, using a base price that was negotiated in the Midwest a lot of times. Am I correct there? Or am I off base here, guys?
Yes and no, right? It depends on each business to business
Okay.
relationship. I can tell you that there are some areas in the South that don't price any cattle off the work in Iowa, and maybe there are some that do.
Okay. So with bid the grid, the concept is that, like you said, you would negotiate that base price, but then there would be premiums and discounts based on carcass quality, yield grade, that type of thing. So we are rewarding the higher quality cattle in that way, but we are doing more negotiation for that base price.
Correct. And we're also, maybe, you can't speak to leverage until the shackles line up with supply. But if cattle are not committed on Monday, then the packer doesn't know how many cattle they have to buy, right? Or they know that they have to buy more in the market. And so that may not change the leverage situation, but at a minimum, it allows for increased negotiation. And then I think all three of us would agree that the dissemination of information is equally as important. As you know, I have the Fed Cattle Exchange. That doesn't have to be the means by which to disseminate the information, but we need a better way to let the world know, whether we're on a tractor, in front of a computer in Colorado, in front of a computer in Chicago. We need to let people know on horseback when cash trades, at what price, and we need to do it instantaneously, as opposed to at the end of the day through mandatory price reporting. And I think that that's a role both Iowa Cattlemen's can play, other state associations can play, in addition to the national associations, or even someone like DV Auction.
Okay, so there's a couple things that I want to get into a little bit deeper here. And I've been trying to take some notes. We're also getting some questions coming in. I'm sorry, guys, trying to think on my feet here, decide where we're going to go next. So one of the questions that's come in is, if formulas tend to be an opportunity to get higher pricing, then why haven't the smaller feeders, especially here in the North, why haven't they turned to formulas to market their cattle? Why are we still holding on to that 50% cash negotiated trade?
Imagine that would be directed at me, correct?
Sure, Brad, go for it.
I think that it's probably at least two different levels. One would be the culture and personality of the independent feeder, who is fiercely independent. So I think that that's some of it. I would also, and this will probably, cause some discourse, but I would also be of the view that what's attractive to a commercial is often the ability to secure quantity, not necessarily quality, but to think about it. So if you got to hire a whole fleet of buyers, and they've got to go look at every place that's got 1,200 cattle or 2,500 or 3,000 cattle, or is it more efficient to just round up 25,000 of them at one place, on some kind of a arrangement? So, to me, I think it's the convenience of supply and quantity. And then some of it is just, I've had people ask me, for me, it's philosophical. That's why I don't formula trade. I believe that if I try to hold out, that I can do whatever I can to slow this industry's move toward the vertical integration that the other industries have already experienced, like hogs and poultry. So naive, but I think that there's still that philosophical hope that some of us are hanging on to, that if we continue to trade enough cash cattle, we don't have to go down that vertical integration, hired man route, or whatever you want to call it.
Okay. So to respond to this concept of bid the grid, I'll open this up to Corbitt and Brad, because Jordan clearly, is a proponent of it. What challenges do you see with this idea and how it could address these problems? Corbitt, you want to go first?
Sure. Neither asking for more cash or more negotiated grids not a novel idea, but it's how do you get the packers to participate in more negotiation? And that's why I think the way we have to do it is it has to be mandated. I think bid the grid would be a fine way to help solve this problem, but I believe it has to be mandated in some shape or form. Just asking them nicely is not going to quite get it done. Anybody that's going to gouge your consumer during a crisis when a lot of people are out of work, well over twice the price of beef, they're not just going to kowtow and say, oh, well, sure, how much would you like for me to negotiate on the grid? We've got to make it mandatory, and we've got to bring the government or somebody in there to force them to buy, whether it's on a negotiated grid or whether it's on a cash basis.
Okay. Brad, what do you think?
Well, there are things about the bid the grid that I like a lot. Particularly philosophically for what it could mean, all the way down to the cow-calf producer. This guy's got a whole livelihood, probably generations of genetic improvement that he's worked at on his herd, and he's proud of it. And there should be some way for him to get an economic reward for that as well. So I think that the concept is a good one. I think, is it the solution all by itself? Likely not, but it could very easily be a puzzle piece in the whole thing that helps us solve this problem. I would have some agreement with Corbitt that obviously the key component to that is that it has to be negotiated. And just like Jordan said, so how do we lever that? How do we get the four majors to, you call them up and say, well, this is our base price for our negotiated grid this morning. That's where we got to get to. But I think conceptually it's a very good idea.
So one of the questions that we're getting in here is, in Iowa, we've sold on the grid and not gotten ahead of the negotiated price. So if it says if paying a premium on feeder cattle to make the grid and you sell them for the same price as commodity cattle, how does that work out? How are you ahead?
I guess it depends on what grid you are using. And I think that's the beautiful thing about utilizing the specs from the CME contract. The first 70% of choice goes to the packer and the balance goes to you. You use plant averages to normalize the differentiation between yields of plant to plant, and you can get paid for dressing percentage. The CME grid can be tested. There's a spreadsheet out there for you to put in what those cattle would do. And you can see that on average, or more often than not, premiums are received. So when we use the term grid and we didn't receive any premium, I don't know the intricacies of that grid. I do know the intricacies of the grid that mirrors the CME specs, and more often than not, the quality of cattle that would be fed in the state of Iowa would bring premiums. I think when we talk about what's the carrot and what's the stick, how do we get the packers to the table? I think it's through reduction of committed supply. And still getting within close to the value of your business to business relationships. And so when we look at the bid the grid, a better example is, as the owner of the Fed Cattle Exchange, I'll remind you that I make no money on the Fed Cattle Exchange. It is purely something that I do for the industry. But what I've learned through the Fed Cattle Exchange is that people's philanthropy stops at a certain dollar amount. And so in the traditional, let's just use an arbitrary number of $20 per head. that cattle on alternative marketing agreements bring back. To give up $20 per head in the state of Texas or Kansas or Nebraska every single week is expensive. But if I only give up $1 or $2 for a more robust and representative base price, I think we can reduce the amount of committed supply going to the packer, increase the negotiation, and that will ultimately force the packer to the table because he needs the supply. Does that make sense, Katie?
I think so. I think so. But what I'm hearing Brad and Corbitt say too is that definitely has some Bid the Grid has some good components. It has some possibility here. But the real issue is how are we going to make sure that we have consistently have multiple purchasers participating, right? That's the whole thing. We've got to have more competition on both sides of this. So what, Brad, go ahead.
Well, one of the things I wanted to toss in there, just as we try to work out what this has to look at, and like Jordan said, there's some nuances and different things like that, but I'm thinking about that specific question, of the guy in the north. The plant averages thing, I understand where Jordan's coming from with that, but the plant average thing is part of that. So Texas last year, I'd say, I don't have it in front of me, I think it was 68, but let's say less than 70% choice. Iowa averaged something like 88% choice. So if you have a Dakota City or a Joslin, for instance, which is the highest grading plant in the universe, they tell me, so you got a high average. So all of a sudden, your par is only par. You know what I mean? Whereas something that's only a little bit better would probably be able to, to secure some premium. So we might, and I think Jordan's open to figuring out how that we have to, balance that a little bit, but that could be part of this guy's reason. I to be honest, I've only ever done 3 grids because I don't believe in formulas. So the only one I can do it is with one packer who will negotiate it. And it doesn't really felt like I was negotiating, but I wanted to know how it works. So I did it on 3 different deals. So I'm sympathetic to his pain as well.
So, Brad, you maybe touched on this, that you've only done this with one packer that was willing to negotiate it with you. Is that why negotiated grid has not been a popular option leading up till now? Is it hesitation on the part of the packers? Is it just that is it cost savings? Jordan, is that where you were getting that $1 or $2 per head of cost savings to just go on a straight formula onto the grid? Why haven't
what you're doing is you narrow the differentiation between an average grid and a business to business relationship to a standardized grid, and in the Bid the Grid concept. And so I think ultimately one of the reasons Bid the Grid hasn't taken off is there's no standardized grid. There's nowhere for anyone to go and find out the premiums and discounts. These premiums and discounts will be changed weekly. They're visible to the world, and they're visible and audited by the USDA. And that in and of itself makes the hurdle or the barrier to entry much lower. Because
okay, so Corbitt, Jordan's touched on this kind of availability of information and talking about the details of the grid here. So, and as a market analyst, I know that you know a lot about what's getting reported every day. So how do you see this fitting in and benefiting, getting us more information to cattle producers, like Jordan said, out on horseback every day?
Well, if you could get enough packers participating in it, it would be fine. We have premium and discount reports right now through mandatory price reporting. The problem is they put such wide spreads on them that you can't make heads or tails out of them. And it doesn't really give you an idea of where you're at or what you're going to get. But, I would say that a lot of folks over the last many years would like to have participated in a negotiated grid, but it's only available to a small portion in kind of a small geographical portion of your 5-area feeding region. And for the most part, it's outside the 5-area feeding region in places like northern Missouri, where they do a lot of negotiated grid pricing. But within the 5-area feeding region, it's only made up about 3% of our sales volume over the last several years. So I just don't know how you get packers to offer it to feeders. I think there would be a lot of them that would love to do it.
And then, so to follow up on that, Jordan, you know, what's the incentive to the larger feeders as well, though? I mean, both sides of it. What's the incentive to both parties here to do this longer term?
The incentive to the larger feeders is that they get a more representative starting price for their business-to-business relationships. That's very clear, and it is a small cost to pay to put cattle on the bid the grid versus putting cattle in the traditional cash. That's what I believe. I think when we look at the bid the grid concept, Corbitt's right. We haven't had much acceptance, but that doesn't mean we can't get more acceptance. And I think one of the things the associations have done a very good job is polling the packers and saying, is this an answer for you guys? Is this something that you'll consider? A standardized grid with the specs for everybody to see. Can this be something you get behind? You utilize these specs every single day in the management of risk. Certainly, if you can manage risk with these specs, you can buy cattle with these specs. Is this something you're interested in? And the association has reported back to the working group that all 4 packers are extremely interested in the concept. Now, Corbitt has his reasons for being skeptical, as does Brad. And I think if there was ever a time where the packer would be more willing to do something new and different, it might be now. I don't know firsthand, but that would be my suspicion.
So let's switch gears a little bit and we can come back to bid the grid. But, you know, I hear that the problem is how are we going to make the packers participate in this? How are we going to ensure that this isn't going to be a short-term practice that then fizzles out again after a few years, leaves us without price discovery again? And that is a question that we have struggled with. We've really spent a lot of time on it at the Iowa Cattlemen's Association. I know that the NCBA working group has spent time on it and others, but that's where we finally got to that point of the mandate, right, Brad? Talking specifically about mandating that 50% of the cattle bought by packers is purchased through negotiated trade, and then that those cattle are delivered and slaughtered within 14 days. Brad, can you dive?
Clarification though, and I don't mean to jump in on your questions, Katie, but
that's all right.
Clarification, Brad, on the 50-14 mandate, is your form of negotiation the pure cash in the historic sense, or would negotiated trade also include a bid the grid concept to achieve the 50%?
Believe that we would be comfortable with adding the bid to the grid concept to that bucket if we can get the packers to truly participate, you know, instead of not if it's only just one. But we've had quite a bit of dialogue about that, Jordan, and there's varying opinions on it. I'd like to think that we'd like to move in the way of compromise to say yes, yeah, but you know, we got to get more than one guy to do it, which we all said that already. So
I've got a quick question that just came in for Jordan, and then I want to throw it back to Corbitt here. Jordan, bid the grid. Does that idea have a delivery spec on it? You know, how would that decrease the captive supply?
Does it have a delivery spec?
Meaning, is there a time period for delivery similar to the 14 days that we're asking for? You know, is that part of your proposal with bid the grid?
I think in the beta agonist world, 14 days on a bid the grid would be semi-implied. I would tell you that I'm a laissez-faire capitalist, which is why I don't believe in mandates from 50% to 14. But I can tell you that in the beta agonist world, which many will use if you're going to grid cattle, that 14 days is more or less implied. Otherwise, the cost exceeds the benefit.
Okay. Okay, Corbitt. So what do you think? I know you were a big proponent of kind of one of the initial proposals that came out, which was 30-14, 30% of the cattle be cash negotiated. Want to get your opinions on 50-14, as well as this idea of rolling in the bid the grid, negotiated grid concept into the mandate that we've been discussing.
Okay. With conversations with several groups, including the Iowa Cattlemen's Association, I decided to use my platform, my forum, to push minimum negotiated cash trade in any form. I felt the most comfortable with the 30-14 because I think that 30 is enough. A lot of the reason that I thought that 30 was enough is because I had seen the research that Dr. Kuntz had done, but I find out later that we weren't supposed to use that research to search for a good place to have a minimum negotiated cash trade. But I believe 30 is enough. Yes, it's less than the 50 that I was already getting. It's a little bit less than where Nebraska's at. But whenever you force your packers that are at 7% in Texas and under 20 in Kansas to go to a 30%, that is going to give a big push, and it will make your packers search for cattle that they wanted to buy on the open market. And many times, especially in Kansas, they would go north into some of your Midwestern fed cattle auctions and look for cattle to fill that mandate, to fill what they have to do. They would go to a place like Fed Cattle Exchange and buy cattle in the open market. I think we have to have competition. We've lost our competition. When I was first out of college in the mid 90s, I worked at the market news office in Amborella. We had 4 pages of feedlots, most of them independent, since before we saw your corporate feeders take off. And we had feedlots and we had feedlot managers, and they took pride in the negotiation that they did every week. And we would work those phones and call those guys, and they would haggle with these packers back and forth and to and fro, and they would get all they could out of the market. They've lost that. They don't even try anymore. They're just market takers instead of market makers. But if we had minimum negotiated cash trade, whether it be 50 or 30 or somewhere in between, whenever your packers showed up early in the week and told you what they would give, they didn't ask you what you wanted for the cattle. They told you what they would give, which is the opposite of how anybody else negotiates. But if you turned that down early in the week, if they had a minimum negotiated cash trade level that they had to reach, they would likely come back around late in the week. You don't get that now. You turn them down on what they offer you early in the week now, you don't get another call that week, and they will probably punish you the next 2 or 3 weeks because you turned that down. It's totally a strong arm tactic, and I think the only way you can get them to do that is to establish a minimum of amount, and the bill that Charles Grassley has before the Senate right now would do that at 50%. I'm more comfortable with the 30 because at 50%, and the way we've got it drawn up now, it's 50% per facility that has to report to USDA through mandatory price reporting. And basically that threshold is harvesting 125,000 a year. And so that's most of your bigger plants. But the mandate that the bill has been written up for, and what we're pushing, is for per facility. So that would be their weekly volume per facility. So if you try to do that in the Southern Plains at 50, it totally upsets the apple cart. You have to reinvent the wheel. And that wasn't really what I wanted to get behind. I was more comfortable with 30, knowing very well that the Midwest, the Northern Plains, they had, most of your cattlemen's associations, your state affiliates up there, they already had it in the books that they were wanting the majority or 50% or more. I was naive enough to think that some of your associations in the Southern Plains might come in and say, we'd get behind this thing if you guys would back it off a little bit and come back down towards the 30. But that was foolish of me to think, because they won't do it. So we're stuck with 50, and I think we have a good chance to get that bill passed, and I hope it does pass.
So the bill that you're referring to, yes, it's at 50. It's a bill that Senator Grassley introduced in the early 2000s, I believe. At that time, he was at 25%. This is not something new for him either. He's been supportive of mandating some sort of level of cash trade. Corbitt, what do you think about including negotiated grid into that percentage, whether it's 30 or 50? How does that fit in?
Like Brad said, we've had a lot of conversations about that. The reason that initially we didn't think that we wanted to include grid pricing is because the way that we want to monitor this and the way that we want to enforce this is through mandatory price reporting. And rather than have this bill passed and signed and made a law, what we'd really like to see happen is in September, when they reauthorize mandatory price reporting, we would like to see this come in as an amendment and come under the same guideline as any, all of your reporting of mandatory price reporting. There's a penalty there if you don't do it. We wanted this if they didn't achieve that minimum to be the same penalty. The reason that we didn't include the grid pricing at the beginning is because it'd be very, very cut and dried if you had cash sales, whether they be dressed or live. It'd be very cut and dried. When you start to include some of the negotiated grid pricing, we felt like it was going to leave many opportunities for packers to find loopholes to achieve their minimum percentage.
I guess I don't understand why we would try to commoditize 50% of the herd. I think we would all agree that a South Texas crossbred isn't worth nearly as much on the rail as some of the incredible animals that are produced in the state of Iowa.
But Jordan, if we included bid the grid in this concept, that would not commoditize 50%, correct? We would still.
That would certainly be a in the right direction.
Okay.
Going back to the mandate of traditional cash, which is where I thought Corbitt was suggesting he wanted it to be cut and dry, the traditional cash of 20 or 30 years ago. Like, why would we commoditize the incredible superior genetics in the state of Iowa? That doesn't make sense to me. Like, why would we want to do that to rural America? Haven't they taken it enough on the chin?
So
do
we want to dive? Is it the
price spread in there? That's been the argument against the minimum negotiated cash trade the whole time is it doesn't have it gives no incentive for quality. Well, it seems like a coincidence right now that the highest quality cattle we have in the 5-area feeding region is in Iowa, and they also have the highest percentage of negotiated cash trade by a long ways. I just got the quotes from El Reno at the sale there today. Not all the 800-pound steers brought the same price. There was a price spread, and when you have competitive bidding in a negotiated arena, then the more desirable cattle bring a higher price. That's what
the last time we bring back. We haven't seen that. We haven't seen that in 40 years. We haven't seen that since you and I got out of college.
That's true.
So what makes us think that we have a generation that can revert back to that concept?
Well, what's to behoove your packers to start to work in a bid the grid type deal? We've got to force them to do it.
Well, we have seen them to move to something closer to paying for premiums and discounts based on carcass trades. Like we've seen that progression. That's why I think there'll be more buy-in of that. I think my biggest concern philosophically, or besides my philosophical issues with mandates and the government being involved in our business, is why 50? Why 30? Why not 16 and a half? Why not 12.2? right? These arbitrary numbers are potentially very dangerous to everything we've done to very dangerous to rural America and all the progress multi-generation ranches and farms have put forth.
So I don't want to cut you off, Jordan. We've got a couple questions coming in. First, I want to go to Brad and talk about this number, 30, 50, either way, it's a higher number than what Jordan is saying is necessary. And we in Iowa, we've shown that you can do it, right? I think the concept came up earlier. If it wasn't one of you guys that said it, it's been in the questions here. The idea of kind of market makers, or like we have here in Northwest Iowa, Northeast Iowa, producers livestock in Nebraska and Iowa, where they are, grouping cattle together and negotiating them on behalf of the owners there. That has worked for us, and I guess one of the questions is, could that work in other areas? Is that part of the solution? But Brad, I want to hear your thoughts.
I actually have several, and I can't help but have to backtrack just a hair. I apologize, Katie.
That's all right. Go for it.
Let me start with what we have today is not working, period, for the guy in the north. So for us to fret about what might happen if we should actually be bold enough to try something, I think is a poor argument. This system here is set up to fail for the Iowa guy, for the independent guy. He's going to get 30 or 50, or last week $183 less. Why doesn't the premium cattle get a premium? Because the packer doesn't have to, because we don't have leverage, because there's too many committed cattle. That would be my response to what's happening there. But I would say, don't forget that what we've got now is not working, and we've known that for years. So, and now we've got some legislative will. This isn't the Iowa Cattlemen bill. This is Senator Grassley's bill, first of all, on this 50% deal. So why 50 instead of 16 or 41 or 30 or, pi r squared, right? 21% negotiated right now, ish, right? 22 maybe some weeks. 2 or 3% negotiated grid right now, ish. So we're at 25%. My view is that 30 doesn't move the needle far enough. It's pretty simple. Would it disrupt some of those guys in the South? Yeah. And I suppose there's packers on this call, and I've made them mad before, so I guess we'll just keep doing it. I'm actually not that worried about whether their world is upset. How about that? I think they're all pretty smart, and they would figure out a way to adapt. And I think if you I'm a small government conservative person personally. Do I like the idea of a mandate? No, philosophically, but I don't know what else to do, because what we've got now is not working. So I see that as our only resort. I feel as though we've been forced to do it. Okay, do we want to? No, but we've been forced to, and now Senator Grassley's picked up the stick, and he's going to see how far he can carry it. So I don't know what the magic number is. Nobody does, whether it's 31 or 48 or whatever. But if we don't have the nerve, the guts, the courage to try to affect change now, then I don't know that this industry will ever try it.
What do I'm hearing this sense of urgency in Brad's voice. I know what I've been hearing from producers here in Iowa in the upper Midwest, both after the Holcomb fire through COVID-19. They're telling us that they can't handle something like this happening again. Corbitt and Jordan, do you feel the same sense of urgency? And, what do you think will happen if we aren't able to find a solution that works long-term, that increases leverage, that increases price discovery, that the packers will take part in, that the major feed yards will take part in? What are we really risking here?
Well, I think our urgency comes with the timing right now. I think our awareness from the general public is higher now than we've seen it for decades as to where their beef comes from, where their meat comes from, where a lot of their groceries come from. We've all of us have probably heard stories during this COVID crisis about people coming into the meat market and they're not seeing any of their favorite cuts in there, and they're asking the butcher where it's at, and he says he doesn't have any more, and they said, well, go back behind the door and make some more. That's where they think that their beef comes from. Your typical elementary school child cannot draw a picture from a piece of bacon to a pig or from a hamburger to a cow. We're too far removed from the farm for that. So your legislators, the people that are going to be voting on a bill like this or making something happen, they even know that something needs to happen. So they're going to turn to somebody like Charles Grassley that comes from a state like Iowa, and a John Tester who is on the other side of the aisle who comes from a place like Montana, and they're going to say, tell us about this. Where normally they would just ask, whichever groups they follow. But I think the timing is right to get something pushed through. And we've got to get it done while the iron's still hot, while people are still excited about having to pay $10 a pound for beef, while people are still wondering how come they went to the grocery store and there was no hamburger meat there, or there was no steaks to be had. And if we don't get something done now, none of us knows how long each feeder's equity is going to last. But as we keep going down this road, like Brad says, we're going to continue to lose feeders. We're not going to lose the big corporate feeders. We're going to lose the independent feeders. The less players that we have feeding cattle, the less bidders we have for feeder cattle, the less that these calves are going to bring from these farmers, and the less cow-calf people we're going to have, the less people you have in your rural communities, and we're going to continue to see those dry up. There's nobody there to serve these communities, to pay the taxes to keep these schools in. There's not going to be any kids in the schools. It just trickles right down to the staple of our country. And I think we've got to get something done while it's on everybody's mind fresh.
I think Corbitt raises some very interesting emotional points, and I don't disagree with everything he said, and I agree with much of what he said. This is the single most important issue facing the livestock industry, and it needs to be recognized, and it needs to be dealt with, and it needs to be dealt with immediately. Since 2014, I have done everything in my power. I put my money where my mouth is every single week, attempting to increase price discovery. I'm here to tell you that through my research, through my investment, that the only way to get increased price discovery is if you level or marginalize the negative economic consequences between traditional cash and the marketing arrangements. And by that, you'll continue to keep rural America on an up and up path, and you'll continue to increase the genetics within the industry that we've worked so hard for. But I can tell you that we have to be research-based. We always have been research-based. If we're going to have a mandate, by golly, let's make sure we're doing a mandate with the right number so that we don't cause more harm into rural America. All feed yards are at risk. All stocker operators are at risk. All cow-calf guys are at risk, big or small. This is an industry problem. All balance sheets have been weakened. And the only way to resolve it is through good discourse and well-studied solutions, not emotional or arbitrary numbers.
Okay, so Jordan, I'm hearing a lot of agreement here, and I think Brad would agree too, that a lot of agreement, a little bit different approaches to how we would solve this problem, right? One of the things that we've heard in common is how are we going to hold packers accountable? How are we going to get them to the table? But as Jordan was just talking about needing research and more data, I know the Iowa Cattlemen's Association has reached out looking for more of that data, but because of current confidentiality guidelines in mandatory price reporting, our researchers aren't able to get the data that they need. I want to dive into livestock mandatory reporting, talk more about MPR, talk about some possible changes that could help this situation as we come up towards, reauthorization this fall. Set aside 5014 for now, set aside bid the grid for now. Let's talk about how we can get more information through LMR.
I don't think LMR is the answer, Katie. I think the answer is within the associations, both state and national. It's about real-time information. It's not about information at the end of the day on a report that looks like it came off a facsimile machine. It's about real-time information via text, via email, or via the internet. It can't you can't rely solely on the government to give us the price data. We have to rely on the associations to transmit the price data, the seller, and the buyer.
So that's what we've got here, led by Nebraska Cattlemen. We've got our Iowa Cattlemen using it too. I think Jeff told me the other day, I did an interview for the podcast, got about 300 cattle feeders in the upper Midwest, Nebraska, Iowa, South Dakota, maybe a little bit of Minnesota, that are doing that every day, sharing that information amongst each other, that kind of thing. Is that what you're talking about? We need to have that.
Nobody does it better than Jeff and Nebraska Cattlemen. That's exactly what I'm talking about. They've invested a ton of money in the infrastructure. They potentially can serve the entire industry. What it costs, I don't know, but it's something that the NCBA or the state association should pick up the bill. I think that if there's one thing all three of us can agree on, it's instantaneous information is extremely important to all of our constituencies and peers.
Well, I think Jeff is listening. So there you go, Jeff. Brad, what do you want to say?
I agree 100%, and I mean, come on, 1999 is when they started NPR. This was a different world. Nobody had a cell phone, well intended. It was supposed to be an information, it's a reporting service, right? I mean, there is such a better way to do it using technology, like Jordan is suggesting. That I'm sarcastic enough to say you don't even need NPR, but I know people would flip out, because they got all this pricing mechanism off of it. But to me, this is maybe, to quote Jordan, one of the low-hanging fruit things. I mean, we should be able to figure out a way to disseminate instantly the information that everybody can use to make better decisions.
Well, Corbitt's figured that out daily for us, right? You hop on and listen to a quick video, and that helps too.
Guys, you can look right there and see one of our national beef wire screens, and that's real-time price information on feeder cattle. Yeah, we could have that on fat cattle too. You're talking about your mandatory price reporting. It comes up for reauthorization this September. We could strip down some of that confidentiality stuff. We could strip down the confidentiality on these formula deals that your bigger feedlots are able to get, because they've got volume, sheer volume. We're not going to be able to. Your little guys are not going to be able to negotiate. We say there's no negotiation in formula. Yeah, they negotiate it once a year, and it could have a plethora of different variables in there. Would the general public love to see that? Absolutely, they would like to see that. Is anybody going to let them see that? Hell no. And you can see Jordan getting nervous back there too. But all your big corporate feedlots are going to say no. They would gladly get behind 5014 if they thought they were going to risk having to show what these formula deals are. But your smaller independent feeders, your farmer feeders, will never be able to negotiate a formula deal like your monsters will. They just can't do it. So that's why most of them turn to just negotiated cash. But if we force these packers to come by more negotiated cash, then that would make them actually compete against one another for Brad's cattle, and we could see that negotiated cash price go higher rather than just whatever they wanted to give.
What do you think, Jordan?
I want to give the same tools, or a tool as similar as possible, to the independent small cattle feeder. And I want to give it to everybody. And the way you do that is you have a standardized pedestrian grid that gives premiums and gets you as close to the mega, multi, whatever you guys believe, in terms of the grid arrangements. When I put the data into this is a really compelling grid, and it is transparent and it's easy to understand, and the scales of premiums and discounts are audited by the USDA. I want to give those same tools to rural America so that they can get closer to the perception of much higher prices.
So going back to that, Jordan, we had a couple questions come in more specifically about bid the grid and the grid based on CME specs. Do you envision either the grid changing over time then, or CME specs changing as time goes on?
I think
And then the
that's
other question is,
yes. Go ahead with the second
okay.
question.
No, you can answer the first one, then I'll come back to the
Yeah, I
second
think
one.
that's the beautiful thing about the bid the grid that mirrors the CME specs. If all of a sudden everybody wants lean beef and Laura's lean beef, we change the specs, the CME changed the specs, etc. Right?
So that was the second question, is how closely are CME specs tied to demand factors and what consumers are looking for?
I think at 70% choice, I think it is a really good blend of North and South as it relates to choice product. So in that respect, yes. One thing we've added to this grid is certified Angus beef premiums, and we've added over 30-month discounts as well. So there's some nuances to this, but those scales of premiums and discounts are also in the USDA data and in the USDA schedule. Think about it from a risk management perspective. It's one thing if cattle trade at 165 in Nebraska or $1 live in Texas. It's another thing if they trade on a CME exact replica spec, right? What signals do we send to the speculator? And more importantly, what risk management signals do we send to the end user or our user in rural America, the guy on the back of the horse, right?
Okay.
He can manage his risk even better.
All right, Brad, I saw your facial expressions. I know you want to chime in with your thoughts here, so go right ahead.
Well, we've talked within the working group about a fluid contract or whatever, specs that would move along. The CME gets to make those rules, unfortunately, not NCBA or anybody else. We talk to the CME. Sometimes they seem to be responsive, sometimes not as much. The percentage of grade in the north is much higher than 70. So I would say we got a little ways to go with some of that. But I'm afraid not to. Yeah, I know you want to get away from the 50% deal, but I think that's fine. But we got to figure out a way to make them bid. That is that not where we're going to get back to here eventually. But anything that would improve the participation in the futures contract would be helpful too. Okay, so if there was more confidence in the futures market, maybe you could attract back the long hedger or the long speculator. This structure of the futures market right now, this steep discount to the cash is not healthy. I mean, maybe there's 3 hedgers out there that think it's a good idea, but I think I could argue them out of that deal. So, yeah, for me, the key still is we got to get the backers to play ball.
Okay, another question for Jordan here that came in. Well, it says Jordan and Brad. So what's to say that the packer won't continue to tighten the grid down like they have in the hog industry? They have the power. They have all the power to do that.
Well, I'll go quickly because Jordan's got more to add, I think, to this. But yeah, Sioux County is the #1 hog county in the world, right? So, I've seen that happen. That happened to the hog producers here. And, there's some parallels here too. When you were asking about the urgency, I was going to say this then, but, I was around in '98 when hogs went to 9 cents. And that's when we just completely went to vertical integration in the hog industry. I mean, that collapsed it. So you had an economic catastrophe, much like we're having right now in the cattle thing. So that's why it's urgent too. So that is in fact what happened. I don't know if there's some way that we can put some triggers in place that wouldn't, But yes, what used to be par, what used to be a premium just became the par, right? I mean, that's what happened in the hog deal. I don't know what the solution to that would be.
I mean,
Jordan?
look, what's to say that choice doesn't become commodity, or certified Angus beef doesn't become commodity, or prime doesn't, right? If the consumer commoditizes our product, that's the problem, right? So here we are, we're creating niches, we're creating premium products. If our premium becomes the commodity, there's the risk. There always is. But I do think the grid concept has been studied. I think the grid concept has been studied well. It's part of the reason we've seen this gravitation from 80% cash to 80% to 80% grid/formulas. And so since we have that data point, it's been studied. What hasn't been studied is the unintended consequences of 50-14 or 30-14. We saw what the unintended consequences of livestock mandatory price reporting is. Here we are, right? That was something we all had to have. And here we are at 8 o'clock Central Time discussing price discovery because we got what we asked for. And so my point is if we're going to mandate something, or if we're going to worry about unintended consequences, which I think is legitimate, we best study or use some proven ideas.
Back to, I can tell you what I hear on our phone calls here is that we don't know what unintended consequences are, but we know what the current situation is doing. Right, Brad? Am I right there? We know that something's not working. And I think you guys all agree on that. Something's not working. We've got to figure out a way to get it fixed here. We've had a lot of different topics come up here. I think we've covered a lot of them really, really well. So I am looking at my notes to make sure I didn't miss any questions that we haven't covered yet. But what I really want to do is have each of you guys, I'll give you a couple minutes, just like a, presidential debate. I'll give you a couple minutes for your closing comments. How does that sound? Who would like to go first?
I guess I'll volunteer.
Thanks, Brad. Okay.
We've got a diverse cattle industry, and I've worked several years locally and at the national level. I understand that. We've got a big challenge because we have a very, very diverse cattle industry. I've talked to different trade organizations, and I believe that the one thing that most of us agree on is that we have to do something to increase the negotiated small, medium-sized guy ability to stay in business, to be competitive, to have a chance. I would agree with Jordan. 2014, a 200-year flood in my hometown. 57 payloaders showed up in that little town of 3,000. Were there any corporates there? Not one. It was every little small cattle feeder that stopped everything to build dikes and help fill sandbags. That's the lifestyle. That's why I live here. It's about economics, but it's about a way of life. So yeah, I'm pretty passionate about, how do we come together now to figure out a way that we all have a chance to enjoy the life that we want. Jordan has every right to have his deal, Corbitt, whatever, but so do we, so, how do we bring this will, because we can do it, how we get there, how do we bring that together so that, my son and my grandson has a chance to enjoy the wonderful life that I've been able to do. So, that's where I'm at. I have all the respect in the world for the rest of the panelists and all these other people I've worked with, and I appreciate their insight. So let's get there together.
Good. Thank you, Brad. Well said. Jordan, go ahead.
Well said, Brad. I think the beautiful thing is that we can all come from very diverse backgrounds. And we all know that we have a task in front of us. It may seem daunting, but it's something that we can tackle, and we can tackle through collaboration and cooperation. I didn't grow up in this business. I'm the son of an automobile dealer, and I grew up in the suburbs of Chicago. And this industry has welcomed me with open arms, and it's been good to me, and it's been tough on me. But more often than not, it's been good to me. And I have the same goals that you have, Brad. And I have a 6-year-old that I want to be in this business. I don't want him to go back to the suburbs of Chicago. I want him to be a cattleman. And the only way to do that is to have a sustainable industry and a sustainable business. And one thing that this industry has done very well, it's always taken a very calculated approach to what it does. And I caution all of us that if we're going to mandate, we must mandate through research and calculation and through academic studies and through real world experience. And I really think that if I can reduce the barriers to entry by giving a grid that everybody has access to, I think I can level the playing field for those that believe that they're being harmed. And so my goal is to really protect rural America, because that's where I want to live. That's where I want the next generation to live. And I think the best means today is to utilize this bid the grid concept and continue to study what the key components are and what the goal line looks like in terms of what numbers we need. So thank you all for having me, and I appreciate you welcoming me into your community.
All right, Corbitt, you get the last say here tonight.
Okay. Well, I also, it was an honor for me to be on such a esteemed panel here. And I'll go back to what I said at the very beginning is cattle people have to be able to obtain a larger percentage of that retail beef price. And we've got to have some negotiating at the fed cattle point. That one, if it's one price or if it's a weighted average price or whatever it is, that price for fat cattle, market ready cattle, is so important to the rest of the folks. And the reason I've gotten excited about this and passionate about it is for your cow calf producer and your stocker operator, not necessarily your feeder. The majority of our big feeders have gotten very lazy in their marketing. They put orders out for feeder cattle that will hedge. They put them in their feedlots. They charge yardage and feed to those cattle. Whenever those cattle are getting close to market ready, they're either involved in a formula. The guys down here are on a base grid deal, and they just turn those cattle in. They hope for a big basis, which is typically what we have. We've got to get something going with the live cattle contracts. The delivery process is not working. Perhaps if we had this bid the grid deal and it was based on their parameters, we could use an average price on that to settle your board, because it scares off all your long speculators. You know, we're sitting here today, your spot month closed at 96.5. We're selling cattle at 102 and 103. Hey, do you think that they're going to take a chance on pushing that 96.5 any closer to 102 or 103 when people can't get cattle scheduled? No, they're going to get cattle dumped on them. So they're not going to get any closer to that. So we've got to do something. The only way that I know, the only way I've seen price increase is through competition and through bidding. You guys know that I'm an auction guy. I think that's the best way to sell cattle. I think if we did some type of a minimum negotiated cash auction would be one way to do it. I think we'd see more cattle in we've got a multi-million-dollar auction facility built just west of Amborella here. It can handle fat cattle. They've looked into it. There's packing plants all around us. They could not get one buyer to show up if they could get the cattle in there, because they don't want to bid against one another to purchase cattle. So we've got to figure out some way to do it. I think the only way to do it is to make a mandate, have a minimum amount. I think the bid the grid deal sounds very good. I think we could throw those cattle in, your negotiated grid cattle or bid the grid, and on whatever parameters you want. That would increase a negotiated cash trade there, a negotiated grid trade. We could throw those two together. That's probably the thing that I've thought we could kind of agree upon here today, and make a larger percentage there. Like Jordan said, whatever that percentage is, we don't know. But we know we've got to get some competition back in this fed cattle market, because right now it's not working, and it's ultimately our cow calf people that are going to do it. There's not one spot in this United States that you can buy land and pay for it with a cow. and it's going to continue to get worse. And if we can't pay these people can't afford to raise cattle anymore. You got people putting orders out there for only cattle that will hedge, whether they get them out of Mexico. There's a lot of feedlots down here around me in Texas that are predominantly or entirely Mexican feeder cattle, because they can get those cattle to hedge and they don't die. And so they're a thrifty kind of cattle. We've got to make it worth people's time to be able to raise cattle, to raise premium type cattle that will perform. And then we've got to give people a reason to go in and bid on those, and then in turn give your packers a reason to buy those cattle. But it's getting to the point now where everything grades choice. I believe it has a lot to do with the instrument grading. I know we've improved genetics. We haven't improved them that much. You know, our cattle in the Texas Panhandle used to grade 35 to 65% choice. Now they're all over 70%. You know, give me a break. Those cattle aren't grading that well. But we've got to get something done. We've got to get something done on this price discovery. And right now is the time to do it while people are excited about it, while people know what we're talking about. And I think right now the best way to do it is through this Chuck Grassley bill. If people want to negotiate on what that percentage is, I think that would be a good thing to do. But we've got some legislation up here to get something done.
All right, perfect segue here, because what I want to touch on here at the end is just what the next steps are here. So first of all, immediately as you log off of here, we have a survey. If you're on Zoom, we have a survey that we really want you to fill out. We want your input on these topics. We want your ideas. We truly want to be listening to the producers in the countryside. I speak for all three of our panelists when I say that here. So make sure that you fill out that survey, please. We will be moving forward at the Iowa Cattlemen's Association. We'll be having some grassroots teleconferences coming up here in July before our summer policy day in July, getting ready for the NCBA summer convention, because we know that at the summer business meeting, this is going to be a hot topic that's going to be discussed. So we will continue to gather input, continue to look into these ideas, get some more information out on Bid the Grid, since it's something that we haven't seen a lot of media coverage or things like that on. We'd like more of that, Jordan, so that we can continue to look for solutions. Like you all have said, our goal is that at the end of the day, our rural economies stay strong, that we have a variety of sizes, types of operations, that we're spread out regionally, very diverse. We're in it for the future of the cattle industry here. So thank you again, guys, for being on here tonight, for this very good debate back and forth and this information. I can see on your faces that some of you want to chime in one more time here, but
I only want to say thanks for having me on, and well done. Thank you to all of you, Jordan, Corbitt.
All right. Remind you guys that we'll have another webinar on Wednesday night talking about selling beef locally next Wednesday. Thank our sponsors again. We've got AgriVision Equipment Group, Farm Credit Services of America in Sheldon and Red Oak, First National Bank of Messina, Frontier Bank, Iowa State Savings Bank, Midwest PMS LLC, People's Bank of Leicester, and Security Savings Bank. And if you would like to watch this webinar again, we will have it on our YouTube channel. We'll have that up tomorrow. Well, we'll also put it on the Iowa Cattlemen's podcast. All right. Thanks, everyone. Have a good night.
Thank you.
Thanks for having me.